Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from this CNBC-TV18 Motilal Oswal studios. It's a Tuesday morning, not a Monday morning. We're coming out of a 3-day long weekend. I think the last one in a long time now. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi, good morning.
Good morning.
The only good part is that we missed the Monday blues, right? Yeah. So, but I think, how many of you were ready to come to work today? I wasn't. I mean, after a long weekend, so many holidays, right?
Actually, I'm fired up today.
You're fired up. Only 4-day week.
I think, yeah, I'm feeling good this morning.
I think the bulls are feeling good as well.
Bulls are feeling good. The question, Sonia, is that are we going to make a new high, right? A new high is not very far away. No. It's about 2% of the bank nifty. It's about 4% of the nifty. And, I want to start with a question, which is, is the market exhibiting signs of a melt-up, right? That's the question I want to start with. What is a melt-up when we define a market melting higher? It's basically driven by, it's a very sudden change in price in either direction. In this case, it's up. It's driven by, part greed, part FOMO, part left-out feeling. And it's very quick. I mean, that's why hence the term melting up or melting down. And Friday was a case in point. We were making this point earlier in the day on Friday about whether this is a melt-up. And, last 1 hour changed things completely. Actually, forget last 1 hour. The last 30 minutes changed things completely. The Nifty added 100 points in the last 40-45 minutes. The Bank Nifty added 300 points in the similar time period. So Friday and the previous last few weeks are slowly building into that kind of price action, which I would define as a bit of a melt-up. As I said, the Nifty is just 4% away from the lifetime high. The Bank Nifty is just 2% away. So if you do see a continuation, these are not very far away targets. Even when the market was down and out, these were shallow corrections at an index level. It was not as if the market was down 20% from highs. And now we are very, very close by. On the Bank Nifty, which has been the stronger of the two indices, it's even closer as compared to the Nifty. Just a quick bit on global cues, because you'll be reacting to 2 days worth of US markets. So the S&P is up 0.79%. The Nasdaq is up about 0.58%. This is the 2-day change. The big cue, of course, is the Fed meeting, which is tomorrow. The decision is tomorrow. A 25 basis point hike is seen. And many are betting that this will be what many are saying one and done, which is that one hike and then the Fed is done. Many are also betting on the fact that the Fed will give an indication that after this hike, it'll be a long pause all through the bulk of the rest of the year. If you get a very explicit kind of a signal, it'll be extremely dovish. But if you don't get a kind of, not a commitment, but an indication, and the Fed leaves things open and says, we'll watch data, etc., I think that may be construed as a bit hawkish. So we'll see which way things go. But that's the big cue. Make no mistake about it as far as markets are concerned. Okay, levels now. On Friday, the Nifty almost got to the 61.8% retracement of the entire fall from the all-time high to the recent low, the March lows. So, the 61.8% retracement is 18,100. Friday's high was 18,089. So that's how close we got to within that 61.8% number. The very immediate resistance levels are 18,100 and then 18,137. These are near-term resistance levels for the index. We're just 4% away, as I said, on the Nifty. So I think that's the logical, bigger kind of target that I think people will have their eyes on. That is 18,887. On the downside, the lower end of the channel, because the market has moved so quickly and put so much between supports, the lower end of the channel on the Nifty is 17,845, and the 20-day moving average for the Nifty is 17,624. These are the two levels to watch out for on the downside, which should hold in case there is a bit of a drawdown which starts to happen. Similar levels on the Bank Nifty. The Bank Nifty, by the way, on Friday closed above, not even 61.8, which it had taken out previously. It closed about the 78.6% retracement of the entire fall. So it's kind of, past all these retracements. And the logical kind of target, except, of course, you can put very short-term targets, day-on-day targets, but the bigger target for the Bank Nifty is 2% away, which is the all-time high at 44,151. The lower end of the channel for the Nifty Bank stands at 42,960, which should be supports and watched closely at this point in time. So, let's just have the SGX up, and I think that will give you an indication of how things are looking this morning. The SGX Nifty is at about 18,113 or so. The SGX is 18,239. So you'll have to compare it to the Nifty futures closing. So it's indicative of a pretty strong start this morning. Sonia.
Oh, absolutely a strong start, and there's lots for the bulls to hold on to, right? I mean, the bulls are sort of regaining control of the market. And there are a couple of more pointers that I wanted to add to what Prashant was saying. The Nifty, remember, is up almost 700 points in just 1 month. So the momentum is definitely on the upside. And, we've had a lot of positive macro data. So Kotak Mahindra Bank's numbers, I think, really stood out as the big positive trigger for me. Highest ever net interest margins, NII growth, a rocking 35%. The asset quality has improved for Kotak Mahindra Bank. That was, of course, one trigger that the market will latch on to. There was large buying yet again from foreign investors. Both FIs and DIs bought in the cash markets. Over 3,300 crores of buying by the FIs. We also had rock-solid GST collections. The revenue collections were at an all-time high of around 1.87 lakh crores. So a lot of positives that the street can latch on to. But as, Prashant was pointing out, globally there are two things that the street will watch out for. One is any news on the US debt ceiling. Treasury Secretary Janet Yellen has warned that the US may run out of measures to pay its debts as early as the 1st of June. So that's an overhang. But the FOMC meet today, perhaps one and done, a 25 basis points rate hike is something that the street is pricing in. But I'm also looking at some more local cues in the sense one is the auto sales, which have been pretty much a mixed bag. So you had some decent numbers in the form of Maruti, but there as well, there's a bit of a slowdown that we're seeing. Auto sales from two-wheeler companies have been under pressure. Hero MotoCorp has seen a fall. So in that context, autos have moved into the slow lane. So we'll track that space very closely. And it's a big week of earnings. So you have a lot of Nifty components reporting their numbers this week. There's Ambuja Cement, Tata Steel, there's Titan tomorrow, there's Hero MotoCorp on Thursday, and there's Britannia, Marico and Bharat Forge on Friday. So it's pretty much an action-packed week that we have on our hands and could be the deciding factor of whether the market sort of breaks out and that melt up that, Prashant was referring to. But so many more positives than negatives, I think, that the market is looking at.
Well, that's right, Sonia. It seems that getting into the long weekend, the bulls wanted to go full throttle.
Yeah.
In the final hour of trade, the way we saw the Nifty surging, that smelled of big institutional buying numbers, and that's precisely the case. Now, this morning, you're adding on close to around 100 points odd. That's what the SGX Nifty at least is suggesting. So maybe for some, they could take some money off the table. But otherwise, this is pretty much a market where you want to stay net long. But don't just look at the index. The party really has been in the broader markets as well. The Nifty is up close to around 4% the last 1 month or so. The small cap index, well, that's up close to around 7.5%. And that's what's making portfolios feel like the markets are rallying. Otherwise, you have just a few stocks on the Nifty that are moving up. And you'll say, well, my portfolio is not feeling that good. But this time around, and we had pointed this out at the start of April, that out of the last 10 years or so, barring 1 year, every year you had the small cap index that outperformed what the Nifty has done. And that record is maintained as well. So you need to stay long and watch for further upsides from here on. The 100 DMA, though, on the downside, that's closer to around 17,800. That becomes the first level of support. That was a big move that we saw on the Nifty. Even in the futures market, you had open interest build up. And the FIs, they added more longs than shorts, though the market continues to remain net short, which is not such a bad thing. You have 57% of their positions on this short side. Index options, I'm looking at the writing of puts. And that's very, very encouraging. Close to around 3 lakh puts were written on the first day of a new series. And in terms of active strikes, the 18,000 put, that's the one that stood out. More than 80 lakh shares getting added out there with a premium of close to around 45 rupees or thereabouts. So that's telling you that the bulls feel that they have the momentum with them. Just comparing two strikes now, you pull up the 18,000 put and the 18,000 call. The 18,000 put has close to around 1 crore shares out there after this addition in terms of open interest. So clearly the data points are suggesting that we're in for higher levels. But stop loss would be important. That will be at lower levels, close to around 17,800, 17,825. That's where the 100 DMA comes in. But at higher levels, the resistance, I think, we're likely to face at around 18,150 to around 18,200 going by the options data. Now, you look at the Nifty Bank as well. That's been the one that's been leading the way, the big outperform in the last 1 month or so. And the 43,000 put has been seeing aggressive writing. support zone out there. Because the premium's around 152, at some point of time it was closer around 300 rupees or thereabouts. So those writers, they're counting on the 42,600 to 42,700 odd mark holding out. SGX Nifty suggesting a big gap up. For some, maybe taking some money off the table will be a prudent strategy, but you need to stay long in this market, going by the ferocity of the move and going by the data points as well.
All right, well, that's the market setup for you. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. Cameron Brand of EPFR Global will join in to discuss the global trade setup. Flow-wise, I mean, he'll run us through the numbers. Later, our research team will bring you CNBC-TV18's list of top 10 stocks for the day. At 8:30, we do a fundamental stock analysis with our expert, Prakash Diwan.
All right, let's begin the day with some stock talk. On the equity side, we have David Doyle of Macquarie, who expects the FOMC to hike the Fed funds rate by 25 basis points on Wednesday, which would push the target range to 5 to 5.25%. There is a likelihood of a further reduction in the forward guidance. Despite this, he adds a statement and communication from the Chairman Powell should keep open the possibility of further hikes, marking a shift to data dependency. He says there is likely to be no indication that rate cuts are being considered. He says while growth appears to be slowing and cracks are emerging in the labor market, underlying inflation measures remain concerning, and this is likely to keep policy constrained going ahead.
All right, let's get you some money market views as well. Abhishek Goenka of IFA Global says the upcoming week features key events like the Fed rate decision, the ECB decision and the US April jobs data. He says the market predicts an 85% chance of a 25 basis point hike by the Fed. But with concerns over small banks and uncertainties around US debt ceiling, the Fed may not be too hawkish. He says the ECB is expected to hike rates by 25 basis points with a 12% chance of a 50 basis point hike. He's expecting US dollar weakness and the dollar index to break the 100 mark eventually, though it may take longer given the Bank of Japan's dovish stance last week. He also foresees a slight appreciation bias in the rupee, and he expects that to trade in a range of 80.5 to 82.5 to a dollar over the coming weeks.
All right, and on the bonds, Ajay Magnolia of GM Financial says with consistent aggressive bids for government securities at the latest auction on Friday, bullishness persists amongst traders as the majority feel that the RBI may maintain a prolonged pause. He says the major trigger would be Fed's further rate guidance tomorrow as concerns linger in the US, wherein inflation still remains sticky. He believes the sustainable stability in the market with yields trading in a narrow range. He expects a 10-year benchmark bond yield to trade in a range of 7.09 to 7.14% for the day.
Well, that's the entire trade setup and market setup, but we've got a lot of stocks that we're tracking for you, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Kotak Mahindra Bank, Ultratech Cement, Mahindra & Mahindra Financial, IDFC First Bank, RBL Bank, Vedant Fashion, as well as Adani Green. Their stocks on the back of positive news flow, while we have SBI Cards and L&T Finance, their stocks that could be reacting to negative news flow. And also, auto stocks, well, they're in focus. It's more or less a mixed bag, so that's where we're going with an amber color.
Okay, well, the big story from over the weekend is JP Morgan Chase emerged as the winner of the weekend auction for First Republic. JP Morgan will get all of the ailing bank's deposits and a substantial majority of assets. The acquisition came after regulators took possession of the First Republic, which is the third failure of an American bank since March. CNBC's David Farber gets us up to speed with all the details.
It is an outcome that many of us had anticipated. It was only really a question of when. And First Republic did sort of stumble out of that tumultuous period in early March when two large banks in the U.S. were taken into receivership by the FDIC. First Republic had since then been a real question mark. I described it any number of times, at least as a zombie bank, because its cost of deposits or funding was so high, and the assets on its balance sheet were not worth what they were when they made many of the loans or bought the securities on that balance sheet, leaving what was a $25 or $22 billion hole. And it finally came to fruition after the bank reported earnings last week, which raised yet again concern when we saw specifically the deposit outflows, despite that $30 billion that was put in by that consortium of banks as deposits back on March the 16th. And so here we are today. Of course, the key question is whether this stabilizes the system, whether, in fact, that amount of time that did go by between the failure of SVB and Signature was enough to sort of give people confidence. Because we did get earnings from the regional banks. We did see the deposit outflows, but we also saw things really stabilize. And so we're in a different place right now.
Okay, listening to this view coming in from Mohammad Al-Arian, Chief Economic Advisor at Allianz. Allianz makes of JP Morgan's acquisition of First Republic Bank. His thoughts, listen in.
This was an unusual situation in the sense that all the incentives were aligned among the three big actors, the banks, the FDIC, and the Fed. You had an unusual alignment, and yet what comes out has all sorts of unintended consequences and collateral damage. We're making the big banks bigger. We're changing the conventional wisdom about what is a safe bank. It turns out that the banks that were once viewed as too big to fail and too big to manage are now the safe banks. We have increased moral hazards. 11 banks had tens of billions of deposits in the banking system. And it just tells you that we are so deep right now in the world of second best that whatever we do will have collateral damage and unintended consequences.
Okay, that's the global setup, but let's slip into a quick break. Kotak Mahindra Bank could be one of the big stocks in focus after a very strong set of numbers. We'll talk more about that and the other stocks to watch out for with our entire research team. Stay with us. Welcome back to Bazaar Morning Call. There is so much to talk about today, so let's get down to it very quickly. The SGX Nifty is indicating a strong start above the 18,200 mark, and Kotak Mahindra Bank could be one of the stocks batting for the bulls this morning after a very strong set of numbers. Abhishek is here to give us the lowdown. Abhishek, good morning.
Morning, Sonia. So I've not seen a 3% ROA for any commercial bank in India with a balance sheet of more than 1 lakh crore. So it's perhaps the best ROA that you can find amongst the large banks at 3%. Net interest margin is at record high at 5.75%. YOY, the NII growth is one of the best that you are seeing in last 7-8 years. A retail segment there, the loan growth was pretty strong at 23.5% YOY and about 5.5% sequentially. Asset quality, one of the best in last 7-8 years with gross NPA ratio at just 1.78% and net NPA ratio of 0.37%. Operating efficiency is one of the best in last 7 quarters with cost to income ratio declining to 43.9% when compared to 50.3% in the previous quarter. On the flip side, the CASA ratio is at 15-quarter low of 52.8%. PNL, both in terms of NI and PAT, it's a beat on our poll. Back to you.
All right, Abhishek, thanks a lot for that. Well, I'm looking at Ultratech Cement, and the numbers are more or less in line with what the street was working with, but that's clearly the market leader with bulk of the market share. So I'm going with green on that one. First, running you through the numbers, both the revenues and the EBITDA number more or less in line. But what's encouraging is the consolidated EBITDA per ton. Now, that's improved by closer to under 150 rupees on a sequential basis. Good news, on a year-on-year basis, it's still a little lower. Now, the good news is the average fuel consumption cost that came down to around $194 per ton. But we've seen a sharp drop in pet coke prices. And the benefits of that will flow through in Q1 and fully in Q2 as well. So though prices are not going up, input costs are cooling off. And that's what will help the EBITDA per ton improve from this 1,050 odd levels. They have a big capex that's underway. Close to 6,000 crores of capex is what they spent in the last year. And in spite of that, they went ahead and reduced debt as well. That's very, very good news. So good operational performance, debt under control as well. Morgan Stanley, they stay overweight out there. They're also adding the fact that valuation-wise, well, the stock is trading at a discount in comparison to its 10-year average on an EV upon EBITDA basis. So that's why going with green on that stock. But Sonia, tell us about the auto sales numbers. It was a mixed bag, so we went with Amber. But run us through the breakup. It
was a mixed bag, and the one big takeaway is that there is a slowdown that we are seeing, especially in the growth rate. So I'll give you some examples. Maruti's numbers were not too bad, but it's still a low single-digit growth that we're looking at, about 6.5% growth on a year-on-year basis. That's led by domestic sales. Domestic sales growth is 8.5%, but exports have been under pressure. So in that context, Maruti is mixed as well. Eicher Motors actually had a good set of numbers, both for Royal Enfield and for the commercial vehicle pack. It was an 18% growth, both in the motorcycle business and in CV sales. So the street will definitely like that. The disappointment really has come in on Hero MotoCorp. Over there, the numbers are weak. Below estimates, total sales have fallen 5.2%, and below Nomura's estimates of 4.5 lakhs, the company only delivered 3.96 lakhs. Tata Motors as well, total sales were under pressure. And it's interesting, Tata Motors is seeing a fall in their commercial vehicle sales at a time when peers like Eicher Motors are reporting a big growth. So you don't know if it's a base effect, but there is definitely weakness in Tata Motors numbers, and that's not something that the street is going to like. Total domestic sales down 4%. And finally, TVS Motor, once again, single-digit growth is what we've seen, up almost about 4%. Very, very, I mean, nothing really to write home about in terms of TVS Motors numbers. So I guess that's the reason why we're going with Amber.
All right, sir. Yeah, thanks a lot for that. But back to Abhishek. Abhishek, a lot of results for you on the weekend. You're tracking SBI Cards, Mahindra & Mahindra Finance, as well as L&T Finance. Let's go get cracking.
Well, Nigel, to begin with the SBI card, the net interest margin is perhaps at an all-time low. So from Q1 FY21 to Q4 FY23, their revolver rate is down from 45% to 24%. Yield is down from 22.8% to 16.7%. And net interest margin is down from 19.2% to 11.5%. Credit cost is elevated. It has increased to 6.3%. Both YOY and quarter-on-quarter, it's an increase over there. Asset quality seen a marginal hiccup with gross NPA ratio increasing on a sequential basis. A card receivable per card is actually just up less than 7% YOY and a decline of 0.1% sequentially. Total income up 30% YOY and 7% quarter-on-quarter, while PAT is up 2.7% YOY and about 17% sequentially. M&M Finance, they have beaten our poll in terms of PNL. To start with, AUM growth is at 26.2% YOY and about 6% sequentially. Spreads have declined 20 basis points for FY23 when compared to 22. The cost to income ratio is perhaps at a 25-quarter high. Operating profits are down 5.5% quarter-on-quarter. Asset quality has seen improvement, and in terms of PNL, both the ANA and PAT is a beat on our poll. L&T Finance, now it's a surprising factor that their AUM in absolute value is at 21-quarter low. So they are seeing fast rundown of their AUM. Asset quality has seen some hiccup. Gross NPA ratio has increased by 45 to 50 basis points on a sequential basis. Disbursements are down 16.5% YOY and about 6.5% sequentially. AUM is down both YOY and quarter-on-quarter by 8.5%. Net interest margin is at all-time high because of the base effect in the denominator factor. ROE continues to remain weak. Both the ANA and PAT figure is on your screen. Back to you.
All right, Abhishek, thanks very much. And we'll be speaking with many of these companies a little later on the program. But there are more financials which reported. IDFC First Bank and RBL Bank are next. Back to you, Abhishek.
Well, Prashant, IDFC Bank is a beat on our poll in terms of ANA and PAT. Their asset quality has seen improvement. Gross NPA ratio and net NPA ratio are perhaps the lowest in last 9 quarters. Deposit momentum was strong at 55.2% YOY and about 8.7% sequentially. Loan growth also remaining strong at 26.3% growth YOY and about 6.5% quarter-on-quarter, which has meant that the net interest margin is at all-time high of 6.4%. Other income also robust, growing at more than 21% quarter-on-quarter, which has aided the ROA. Cost to income ratio or the operating efficiency is at 7-quarter low. ROA has come in at 1.4% when compared to 1.11% in the previous quarter. PNL, both the ANA and PAT is a beat on our poll. RBL Bank is on expected line that it was to improve on a sequential basis. So quarter-on-quarter, Street was anticipating a good quarter from the bank, and bank has delivered on the same. Gross NPA and net NPA ratio are the lowest in last 9 quarters. Net interest margin is at 4-quarter high of 5% when compared to 4.7% in the previous quarter. Operating profits, you are seeing a 7th quarter of YOY decline in operating profits. RWA to advances is at 11-quarter low of 121%. The return ratios are one of the best in last 15 quarters. ROA has touched 1%. However, ROE remains weak at 8.1%. In terms of our poll, the ANA is slightly below our poll, but a PAT is a beat on our poll. Back to you.
Okay, thanks a lot for that. It's a good quarter from RBL Bank. Surbhi is joining in now. She has a couple of stocks on her radar. She's looking at Vedant Fashions, Adani Green. How was the performance this time, Surbhi?
Thanks so much for that. So Vedant Fashion reported a good set of numbers. Their revenue was up 15% on a year-on-year basis. The gross margins saw a little bit of compression, came in at 72% versus 75% same time last year, but they've managed to maintain their EBITDA margins at 49%. The PAT was higher by 23%. Their retail growth in Q4 FY23 was up 21% on a year-on-year basis and over 46% when you compare it to the pre-COVID levels. The same store sales growth was up 14% on a year-on-year basis and up 16% when you compare it to pre-COVID levels. Moving on to Adani Green, again a very strong set of numbers. Their net revenues were up 78%. The EBITDA was up 2.3 times. The margins have come in at 87% versus 67% same time last year. Their FY23 operational capacity was up 49% on a year-on-year basis, and the sale of energy for the full year was up 58%. The board appointed Amit Singh as the CEO of the company and also moved Vineet Jain from MD and CEO to MD of the company.
All right, thanks a lot, Surbhi, for that, and thanks to our entire research team. Here's a quick recap of our top stocks with positive news flow. There's Kotak Mahindra Bank, Ultratech Cement, M&M Financial, IDFC First Bank, RBL Bank, Vedant Fashion and Adani Green. The auto stocks in focus on the back of April sales is quite a mixed bag. While stocks with negative news flow this morning, there's SBI Card and L&T Finance. But let's also give some time to assess what's been happening in the world of commodities. Manisha Gupta is joining in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. Thank you for that. Well, I'm looking at the crude oil price is still holding below $80 a barrel. Actually, for the WTI, it is still below $76 a barrel. But after 5 months of losses, April has seen about a percentage of gain coming for both the varieties. So breaking that the pattern, really. But expectation of rate hikes from the US Fed and the ECB this week will keep the markets jittery. So will the fact that the Chinese markets are shut till the 3rd of May. This is the Golden Week holiday for them. But China manufacturing activity and the services numbers, all of that has come in on the weaker side, and the statement from China saying that they are going to push growth, come out with some stimulus measure, is what is keeping hopes into the market. Having said that, if you look at the metal prices after gaining in the day yesterday, we have seen iron ore prices slip to a 5-month lows yet again. Steel is trading at a new 4-month lows right now. Copper prices did gain 2.5% in New York session yesterday, but they are trading in the negative right now. And so is the case with aluminum and zinc as well. All of them trading slightly in the negative. China participation is out. The volumes are lower and upticks are being pulled at.
All right, Manisha, thanks very much for that. Commodities there in focus. Now get to the big story of the day over the weekend, actually. Market regulator SEBI has pleaded to the Supreme Court for a 6-month extension to complete its investigation on the allegations made in the Hindenburg report against the Adani Group. Ashmit is joining in with the details of this plea. Ashmit.
Well, the market regulator SEBI has moved the top court and is seeking a 6-month extension for completing its investigation into the Adani Hindenburg saga. What the SEBI application essentially says is that as per the Hindenburg report, there are 12 suspicious transactions which need to be investigated for violations of disclosure norms on related party transactions, corporate governance norms, minimum public shareholding norms, as well as stock price manipulation. This is essentially the scope of investigation, but that's not all. SEBI also goes on to say that it also wants to investigate the trading action that took place before and after the Hindenburg report, and will be checking for violations of FPI norms, of ODI norms, of insider trading regulations, as well as norms on short selling. SEBI also says that these prima facie views have also been shared with the expert committee. As for the scope of investigation in terms of companies that may be on the radar, on SEBI radar, SEBI points out that there are 7 listed entities of the Adani Group which will be looked into. The 7 entities are Adani Enterprises, Adani Power, Transmission, Green Energy, Ports and SEZ, Total Gas, as well as Adani Wilmar. SEBI also says that not just these companies, but also their subsidiaries and step-down subsidiaries will also be on the radar, and that investigations may also require depositions by key management personnel as well as auditors. SEBI on its part has sought a whole host of information and a whole host of details, financial documents, statement of assets, liabilities, receivables, details about directors, promoter shareholding, also talks about minutes of the meeting as far as board meetings and auditor meetings are concerned, related party transactions, as well as details of overseas entities which are connected to these transactions. So that's essentially a very voluminous set of documents that SEBI says it has with it, and says that because of the voluminous nature and the complex nature of these transactions, ordinarily it would take 15 months, but SEBI says they'll try to wrap this up within 6 months' time. Now, the Apex Court will have the final word on granting this 6-month extension.
All right. Well, it's up to the Apex Court, the Supreme Court, to take that decision. Ashmit, thank you very much for getting us those details. We'll take a very quick break here. Prakash Devan will join in to talk to us about some stocks that he likes, of course, commenting on the earnings which have come through as well. A little later, we'll have the management of Ramakrishna Forgings to talk about their 4th quarter earnings. Earnings look good. Stay with us. Conversation coming up.
Welcome back. You're tuned into Bazaar Morning Call. Well, the SGX Nifty suggesting a bit of a pullback, but we had a long weekend, right? So we need to catch up with the SGX Nifty. And if that's the case, then we're likely to open up in the green with a gain of close to around 100 points. I'll be actually surprised if we see that big a gap up opening because we rallied towards the end of Friday's session as well. But plenty of stocks to discuss, and a lot of them reacting to their numbers. And to help us out with that, we're joined by Prakash Diwan. Hi, Prakash. Morning. Thanks so much for joining in. I hope you had a good weekend, Prakash. But plenty of numbers that did come in. Well, Kotak Mahindra Bank, what did you make of those numbers? And if you could tell us, among the private banks, what's your top pick now? First, the numbers and your top pick from there.
Good morning, Nigel. Yeah, I mean, I definitely enjoyed the long weekend, and I know there's a long time before that happens again in July or whatever. So, the Kotak Bank numbers was a very clear reflection of the fact that the bank has waited all these quarters, taken those steps back to kind of, hold on to credit growth, making sure that it does, whenever it starts unleashing growth, it does it in a way which is stellar. And that's exactly what these numbers tell you. I mean, particularly the kind of return ratios that they have notched up, the return on assets, for example, is stupendous. Now, I don't know how strong that is as a trend that can kind of continue. But even if it does for the next 3 quarters, you probably have a FY24, which can probably see the bank grow at a phenomenal pace. Now, all of that makes it complicated for the simple reason that we are at a cusp of a change in transition in the bank leadership come December of this year. So, a lot of people will want to kind of make sure that they weigh that against the kind of growth that the bank is kind of scorching growth at which it's probably likely to grow. It also makes it confusing to decide which bank to choose out of the private sector. The reason I say so is Axis came up with, again, a stellar set of numbers in spite of the entire hit on the Citi acquisition that they've taken on the P&L. The numbers still look pretty impressive. Their core profit is still growing at a very phenomenal rate. With the Citi acquisition, there could definitely be a lot of opportunities to improve margins, cross-sell, upsell, all of that. And then, of course, ICICI, there were no complaints either. So, and there you have HDFC Bank, which is also in the throes of transition, making itself into a much more bigger, far more efficient, scaled up kind of a operation. So it is kind of getting a bit confusing for private sector bank picking. But I would still stick to things that are already proven. I would want to see Kotak for another quarter and some sort of continue from where it has done on the last quarter. And while Axis digests the Citi acquisition and ICICI is already kind of looking at decent valuations, to be honest, it's not it's not cheaply valued. I would still stick to HDFC given the situation it is in among the private sector banks at this point.
Got it. Okay, that's the latest in the whole takeover battle between Minda Corp and Precol. So now Minda Corp has filed an application with the CCI to acquire up to 24.5% stake in Precol. If you remember, in the month of February, the company had announced acquiring 15.7% stake in Precol. It first started with Precol seeing about 4.5% equity change hands. And at that point in time, when we spoke to the Precol management, they said they are not aware of what's happening at the moment. They don't want to sell their stake. They don't want to they're completely committed to the business. But this is a very interesting takeover battle that has happened. And now, as time has passed, Minda has now filed an application to acquire up to 24.5% stake in Precol. Prakash Diwan, you've seen this entire story play out. And I think everyone was expecting it to happen, that Minda would eventually take over Precol. But what happens now with both the Minda Corp stock and Precol?
These kind of takeovers are never very smooth or very, amicable. Because I remember listening to the Precol management when it said, we are in no mood to kind of, let go of the business. And Minda kept on saying it's just a investment into the promising business that Precol offers. But, as the contours of the intent of the management, of the Minda management kind of gets to be unfolded, this will get to be a bit messy for the simple reason that they will have to probably pay a superior price. And the price has moved. Precol has already moved within this span of the announcement and today. And it would continue to move. But I'm not too sure whether Minda, as a stock, Minda would kind of, see any positive reaction from here on. because it needs allocating capital. I mean, we've seen recently what happened to GCPL, Godrej Consumer, and Raymond. There's so much that can go wrong in terms of pricing, in terms of what you pay. So my sense is Precall is the one that will probably benefit as a stock out of this entire transaction, because that's being coveted as a takeover candidate, and which means that there will be a price that will come into play which is superior to what it is right now.
But the action has already taken place, has it not? I mean, the stock is already up 85% in the last 12 months. And of course, Precall is a great asset. I mean, it's the second largest manufacturer in the world for instrument clusters and for fuel level sensors, both for 2- and 3-wheelers. So that part is taken. My question was, is there any incremental upside now, or do you think a lot of it is already in the price?
No, I think, Sonia, you could probably see some more move in Precall. From the time that this announcement was made or this event started off, it probably is not that entire 85%. 85%, if I remember correctly, would probably be dated from a 12-month period, which means that there is still more upside attributable to this call. And once the acquisition goes through and Minda has Precall assets in its portfolio and how it leverages that entire piece, then you could probably start seeing some value accretion come to the Minda side. But for the timing, I think Precall would probably see another 15-20% of an upside from here on also. I wouldn't be surprised at all.
All right. Prakash, just a quick word on the market itself, because I think we're at a juncture where we are almost at new highs. On the Bank Nifty, we're about 2% away. On the Nifty, we're about 4% away. And price action is kind of showing you what I would call a bit of a melt-up kind of a move. Very sudden, sharp rise, easily coming. The question, though, is, okay, new high may come, but is this smelling like the start of a bigger move from here? Or you think that is unlikely? Because consider this evidence on the other side. You have a situation where the QE is still on, right? Almost $100 billion a month in terms of the Fed balance sheet. There is perhaps one more hike coming out of the US. And you look at the auto sales numbers, some of the other high-frequency indicators are also showing some moderation in terms of growth, GST numbers notwithstanding. What's your sense, Prakash? The question is it a bigger move? Because you may you may make a new high, but what beyond that? Go on.
Yeah, Prashant. So it's quite a complex situation that we face ourselves with. Globally, I don't think there's anything that's receded in terms of the risk of a recession, particularly in the US. And as I can make out from people I speak to in the US, the recession is actually underway. It probably is much softer than what most people anticipated. And it will probably be much longer drawn because of the softness. But it is very clearly there. And then we've seen that in some of the numbers, particularly coming from the IT pack and all. Back home, if you see, the GST numbers, of course, there's lots more that happens in the month of March. March end is definitely something which has a lot of other things adding to it. So you probably factor that in. But the robustness in spending on the upper end of the consumption curve, that is something which is not coming down at all. And that means it's compensating for the lack of demand on the mass side, right? So, and that's exactly why you might have two-wheelers struggling, but you have the BMWs and the Mercs of the world doing so well. So that's precisely where we are. And if you look at the markets, my sense is the China factor is completely taken a backseat. What happened in November, December in terms of the expectation of reopening, money going there, that money is not really started working for it. So I think India is going to be much more attractive from a FI inflow perspective for the next few quarters, and that's going to change things dramatically.
Okay, I also want your thoughts on Ramkrishna Forgings, but I'll just get the management in first to give us some commentary. It's the first corporate on our radar. Very strong numbers, actually. The Q4 revenues and EBITDA saw healthy growth, while volumes in both domestic and exports witnessed good growth this time. Naresh Jalan, the MD at Ramkrishna Forgings, joins us now. Mr. Jalan, good morning and thank you for being with us on the channel. In FY23, you ended with revenue growth of over 30%, very strong indeed. But can you give us a sense of what FY24 could look like? Can you replicate this performance?
Good morning, Sonia. I think what we are looking for in FY24 is a very strong market. And we expect to have at least 10 to 15% volume growth. Raw material pricing is still not factored in, so it will go as it moves on. But we expect at least 10 to 15% volume growth.
So that will be around 150,000 tons at least. 150,
Yes,
155,000.
Yes.
So you're expanding capacity in any case, right? You said that the capacity will go up to about almost 2.4 lakh tons. That is by September of this year?
We have given a complete roadmap of first quarter and second quarter, and that's basically on a warm and cold footing side. And the entire capacity of new 55,000 tons is going to come in by September end. So second half of the year should see more. Right now, 10 to 15% volume growth is from the expected and established lines already in the organization. And this new capacities which are coming in, we expect second half the volumes to ramp up from these lines.
So your installed capacity is about 1.9 lakh tons right now. It'll go up to about 2.4 lakh tons by the end of the year, broadly.
Yes, broadly. Yes,
no,
correct.
but sir, could you clarify then on the volumes front? If you're from the existing capacity that you have, will be at 10 to 15%. So we're already at around 158 to around 155,000. Then you'll be having more capacity that's coming on stream. So put together the two, should we be in the vicinity of around 160, 170 or more? We would like to know it as an entity on the whole, the existing capacity plus what's coming on stream.
With the existing capacity, we are expecting to do a tonnage of close to 150 plus tonnage this year in FY24. And from the capacities which are coming up, the next 50,000 tons which is going to get installed, I think we will see as the capacity gets established, and then we would like to comment on what volume we can expect from that in this year, because that will go through customer approvals and field approvals. So that's a new technology which we are bringing in cold and warm forging. So we expect some more approvals and timelines to be taken from that. So we are right now not building in any volume in this year from that line.
Right. That's 50,000 tons, I think, not 5,000 tons. The flashes will correct that. Now, sir, just a quick point. So we'll wait for the how much you'd sell out of the new capacity, but you already have given a overarching number, right, in terms of revenues. You said your revenues should go up to 5,000 crores. FY23 revenues were around 3,000 crores. So you're saying you go up to 5,000 crores by when? Can you give us some timelines?
We are looking at FY25 as 5,000 crores top line for the company with all these installed capacities in place.
Okay, so FY25, you're going to hit 5,000 crores in terms of a top line compared to 3,000 crores currently. Got that. The other thing is, your realizations per ton have gone up about 10.5% in FY23. You're sitting at a little under 2 lakh rupees per MT. Can you tell us what is the expectation in FY24? Do you have the additional levers to go up further in realizations? If yes, what would the ballpark look like?
We are looking at 210 or 215,000 realization based on whatever value engineering or value addition we are doing components. We have almost stopped selling as forged components. We are completely moving to 100% of our components and fully finished, ready to use for vehicles. So that's the reason the realization is moving up, and we are expecting at least another 10 to 15,000 rupees per ton realization to go up within this year.
Okay, so 10 to 15,000 rupees realizations will go up this year, and you're saying it will improve to 2.15 lakh rupees per MT by the end of FY24. Got that? I wanted to understand, this recent order that you got from with the Titagarh Wagons in consortium with them from the Indian Railways. The total order size is about 12,200 crores. But can you tell us about the execution timelines in FY24, FY25? How much do you think you can execute? How much could come through in terms of earnings for you?
No, nothing is Sonia in next 2 years. I think FY26 last quarter, we believe the production is going to start. And the railway order is only 40% of the installed capacity which we are putting up. We are putting up a plant for manufacturing of close to around 220,000 wheels a year. So 80,000 pieces of wheels are going to be bought by Indian Railways in a guaranteed order. And balance, we feel that we can sell it in the domestic as well as export markets going forward. So first production batch of 500 wheels, we expect to happen in the last quarter of FY26.
All right. Very quickly then, Mr. Jalan, let's wind this down. Revenue growth last year was around 30% approximately. For this year, taking everything into account, what you said, volumes, realizations, what kind of a revenue growth you're looking at? Margins are currently at around 22%. So where does that number move? And debt has come down. Net debt has come down to around 1,100 crores. What is the reduction you have planned for this year? FY24 numbers is what we're looking at. Very quickly, sir.
The debt number, we are looking at another 100 to 150 crores going down. With the performance going up, we are looking at close to 100 to 150 crores in this year. But in terms of top line, it's raw material pricing is right now fluctuating. So we would not like to comment on what can be expected top line, but we expect margins to be very stable or improve from here on. And debt numbers, we are looking at completely running down on the debt, and I think at least 100 to 150 crores debt reduction over this FY24.
All right. And margins will be around this 20 to 23% level, right? You'll maintain it?
I think it's going to improve from here on. We are able to maintain our margins for the whole year. And so I think we are looking at least improvement from what we have achieved this year.
So earlier you had said you'll become net debt free by FY25 end. You hold on to that target?
I think that we were wanting to raise a QIP at that period of time. With the QIP funds, we were looking at it. But 1 year plus minus, I think by FY25, what we are looking at is having a debt below 1 time EBITDA. So I think after that, it may be the amount of free cash flow which we are generating right now, maybe another year or so, we should be net debt free.
All right, we'll leave it there. Thank you very much for joining us, and good conversation on the numbers. The numbers are looking good, and there's a big step up in earnings coming, revenues, and of course, consequently, earnings coming in FY25 once all of the new capacity is utilized. We'll take a very quick break here. We'll be back with Mitesh and Sudarshan, who will join in for some technical trading ideas. Stay tuned. Okay, welcome back. Mitesh and Sudarshan are with us with some technical trading ideas. Gentlemen, good morning. Good to have both of you here. Good to see you after the long weekend. Sudarshan, Friday, last 30-40 minutes, what a move it was, right? 100 points came quickly on the Nifty, 300 points came quickly on the Bank Nifty, which now on the Bank Nifty at least puts us very close to new highs, 2% away. How are things looking this morning, Sudarshan, and what trades would you take?
Good morning. See, what happens, Prashant, is that Friday was apparently the final short squeeze, I would think. People were worried there is a 3-day weekend. We don't know how Tuesday will open. And the last shorts probably closed their positions. That's the reason I suspect for that sharp rally. Now, today morning, we are open with another gap up. Forget the SGX Nifty. The futures are likely to open 100 points higher than Friday, and that's good enough. So my view is that we have reached a level where profit taking is essential. The markets can go up a little. Nobody can say where they will stop, but a pause is likely to come and consolidation will be the order of the day. So traders should look to start taking profits, take partial profits at the open, trail your stops, put 18,000, then 18,050 as your stop loss as the market day develops, but try to pull in the money and step aside.
Okay, pull in the money and step aside. Got that. Mitesh Thakkar is also joining in. Mitesh, do you think this market has enough ammunition to get well above that 18,200, 18,300 mark? And if yes, what should the strategy be for today and perhaps, a positional trade for the week?
Good morning, sir. I think eventually yes, but I'm not sure when it comes to the immediate effect, which means that basically if you look at the history, around the first week of January, the index peaked around 18,250 to 70 zones, and we might open around that level. I think, having seen a rally of about 700 points from 17,550, which is the low we got on 21st of April, closer to 18,250, I think there is a good chance of profit booking happening. So my sense, my instinct on the first open, if it's about 100, 110 points higher, would be to take at least part profits off the table and then trail the stop loss close to about 18,150, 170 zones. Let's see, but the initial feeling is that 18,250, 270 will come into play, and we might actually see a day or day and a half of consolidation before we pick up steam again. The eventual setup is positive for me, so I think intraday declines will be buying opportunities, and I do expect eventually the index to get past 18,250. But tactically, I think today some profit booking is what I expect.
Okay, all right. Some profit taking possible. Maybe take some money off the table and then trail your stop loss. Morning, Mitesh and Sudarshan. Mitesh, you go first. What about your individual stocks?
Morning, I have all buy calls given the fact that we have been trading with extreme long buys for the last many days, and today gap up will see some continuation, at least for stocks which are still showing good strength. It could be a good day. So Apollo Hospitals is a buy with a stop below 54.90 for targets of around 45.95. BEL is a buy with a stop at 102 for targets of 107. HAL made a fresh swing high. Buy here with a stop below 28.95. Look for targets closer to 3,000. And IEX was the price and volume breakout stock on Friday. So that's a buy with a stop at 154 for a first target of 162.
And Sudarshan, how about your ideas for the day? What would they be?
Well, BEL is a buying opportunity. The stock had a very handsome rally and then has gone into a consolidation for 5 to 6 days. That's normal. I think it's on the verge of breaking out on the upside again. Buy with a stop under 99. GAIL is my only intraday short. For some reason, GAIL had a bad day on Friday, and that somehow changed the short-term trend for it. So it's an intraday short with a stop above 109. Hind Copper is a buy. It's a very long consolidation in that chart. Now it's filled with news, so that needs to be taken into consideration. But the charts would suggest a buying opportunity with a stop under 97. And finally, Manappuram is again a buy. I had advised a positional buy much earlier. The stock obliged us by going up. It's in a small consolidation, likely to move further. Stop under 124, consider buying it.
All right, we leave it there, gentlemen. Good speaking with both of you. Appreciate your time here, and we'll speak again in a bit from now. Manoj Muralidharan is Vice President, Derivatives at Relegate Broking. He's joining us now to take some questions. Manoj, good to have you here. Thank you very much. I mean, as somebody earlier was saying, actually Sudarshan was saying that Friday, according to him, was the last of the big short covering move. And, you don't have that much ammunition by way of covering which is left now in the bag. Your sense, looking at the data, what is it telling you?
Good morning, Prashant. Prashant, when we started the April series also, the FIs were a good short, at least an 80 to 90% is a bracket at which they maintained the short. But into this May series, they are hardly at 60%. And generally, they have an average of around 50 to 60%. So FIs have been, let's say, complacent in terms of last 3 months, if I have to say, in terms of shorting. And if you look at the volatility index, I don't remember the last time we had seen it at 10.5 level. So it's been almost a year now, and the complacency has set in. Now, the last 1 hour of trade, ideally, there has been long positioning. It is not only short covering, it is a blend of long as well. Nifty added 7.5% open interest, and the bank Nifty also managed 4.5%. So now the point here is 18,000 strike put writing and 18,300 call strike writer. This is where that range might be. Now, every time the Nifty dips towards an 18,050 to 100, that becomes a buy for a 200, 250 odd points. Now, the second question you asked, is there enough ammunition? So I guess this entire rally started from March onwards, if you see, because there is a correlation between the debt market and the Indian equity markets. And from October last month, almost 22,000 crores has come into the debt flow. So we believe that equity inflows would still continue, and there is a possibility at least we go back to that 18,600 level before it takes a further decision as to will it consolidate or would that be a correction in the short term.
All right. What about individual stocks, Manoj?
So in a stock specific, I believe that ONGC is a good stock. There is good delivery-based buying, and the stock has a potential of almost 170. So 158 to 159, we recommend buying that. And you can use a call option or a stock future as well. So we believe that can be a good buy. Same goes with Ambuja Cement. We believe 396 to 398 is a good level where there has been long positioning. The stop loss should be 390, and a target close to 412 in the short term is very much possible in the stock.
Okay, thanks a lot for that. So those are some stock ideas. Let's slip into a quick break. On the other side, we'll have the pre-opening rates. We will also have Deepak Khetrapal of Orient Cement to talk about their Q4 earnings. Stay tuned.